So hey everybody, so what I want to do is I just want to do a quick video on showing you why I use the Heiken Ashi Candlestick as opposed to the regular Japanese candlestick. So this is the regular candlestick here. This is today's action in AMD, December 10th. And the open is here, so I'm going to do the open range still. Just look how choppy this price action looks. That's our opening range. We get a break above, very forceful break, and then we get a bear 180. Takes out all of that. Bear 180 takes us into our 20 period moving average. A lot of guys would have went, a bearish call on that, seeing the bear 180 with such force, even though it stopped at the 20. And then we get 50% retracement on that, taking us off of those lows. So that's the low now, taking us off of that, which reversed this 180. So you got a 180 on your 180. That's very, we got the big one, big down, we got a big up, then a big down move, and we got a big up move again. Seesaw. So, had you went long here, you would have got stopped out. Had you went short here, you were still in your trade. Well, I don't know. Now you would have been stopped out, because this you would have went in, and once you lost this bar, you would have got out. So that would have been some very choppy action there. But hopefully you waited and got in on this bar here, which was very nice. Nice move off of our 8 here, and you could have got out right there as you went back into the 8. And maybe winning again off this 180 right here. This bear 180 had a down move, is taken out by green with force. And you ride the 8 again, get this massive red bar. If you win in on this bar and this bar is your stop, you still begin that trade, but you're losing a lot of your money. And you would have stopped yourself out here, and you would have got scared in this area. And right after that, you would have missed this up move here. So that up move there had enough force to take us above the 200. So we got a little weakness here. Another bear 180, bull 180. That is a choppy market there, even with our MACD. We go to the MACD. MACD starts to go red here at this point. Kind of flattens our price action a little bit. I just don't like trading the regular candlestick. Now what I'm going to do now, I'm going to take all my markings off, and we're going to go to the Heiken Ashi Candlestick. Remember how choppy this looks. Now this is our open. I'm going to mark the opening bar off. It should be fairly the same. So, okay, this is the Heiken Ashi. Now, see how much smoother that is? How much easier it is to find the dominant trends and to stay with those trends? So using the Heiken Ashi, the open looks pretty much the same. We get a break above the open. And then we get sideways movement and a little bit of weakness, but not enough to take us down to our 20. So that is a very nice looking picture there. You can clearly see that this is weak bearish pressure. You can clearly see that. Now back here on the regular candlestick, this looks like strong bearish pressure. This big red bar is bigger than any of these preceding these green bars. The biggest bar is your red bar. That denotes the biggest movement in the stock, in this point in time is red. But you can see as time goes along, you've got more green than red. So green takes over, the positive momentum does take over. But for me, it is much easier to read the trends and see what's going on with the Heiken Ashi chart. Now, the Heiken Ashi doesn't give you the exact price of the stock. It takes an average of the preceding bar. So you're getting a smoothed average price of what the price action is, which is why there's no gaps, none of those big spaces. Everything, the action is smooth for you. I find it easier for me to manage my trends, to manage my trades, to get in and out when I use the Heiken Ashi candlesticks as opposed to the regular. I just want to know what trend is it, what's the most dominant trend, how strong is that trend, when can I get into that trend, when I should get out. And using the Heiken Ashi gives me that information better than the regular candlestick. I can clearly see this is our open, negative open that we overtook with green force, then a little bit of side movement, indecision, and just a little bit of red. A little bit of red. This is much different from looking at this guy here. You can still get the massive green bars, which are telling signs. You want to trade big elephant bars. This right here is what you're looking for to find great trading opportunities. That is big money making this move here. So you want to look for those guys. But for me, it's just easier for me to find my trend, to find my entry points, the accurate price levels using the Heiken Ashi. It really clears up a lot of the static in your charts, a lot of the jumpiness. It makes it a lot easier for me to find the bottoms. I can clearly find, a top area. This was our bottom, then this became our bottom. I can clearly find my levels. This was a soft top. As you can see all this price action here. This was a soft top. This was a soft bottom as we bounce off that. And this became a bottom. This is right now resistance top. Bottom is a lower low than this one. Higher low, so that's a bullish trend showing up there. And let's see if that continues on. Yeah, see that's the bullish trend we saw approaching. See, I can easily read this price action using the Heiken Ashi chart. It gets rid of a lot of that static, a lot of the false signals, the false breakouts. And get rid of a lot of that. Now, let's go back over to regular chart that most people use. You can still see this. This is, clearly bearish. Small 180. Clearly a bottom. You can still see the same information with the regular chart, but it is a lot more smoother with the Heiken Ashi. You can still find your tops and your bottoms here. This is clear sideways movement. You can clearly see that. We've got a range approaching. This is the range we're in now. It may bounce in that range for, half the day, But yeah. For me, it's easier for me to utilize the Heiken Ashi. A lot of people, most people utilize the regular Japanese candlesticks. I mean, if they are successful doing that, you can be. But for me, I will stick with what I know, what works best for me and my strategy, and that is the Heiken Ashi. I'm not at all concerned with the small, minor movements here. Inside bars showing the indecision are great points to focus on, but I don't want to get shaken out of my trade because of that. If that trend is still strong. Let me take a look at this area here. I want to see if that indecision bar looks the same. See, here we got a massive red. It's not an indecision as it was on our Heiken Ashi. So that's just works better for me, guys. You can use whatever works best for you. Some guys, let's see here, we got the colored bar. Some guys want to use that. You got the line, hollow candles. A lot of people use that. Let's see what else we got here. Mountain, I've seen here and there. Baseline, delta, never seen anybody use that. Wave, never seen, well, here and there. Then the scatter plot. So there's lots of different ways to just give form to the price action, give form to the movement of the stock. The things you see on the chart, they don't exist in real life. It's just a way for us to compartmentalize the action of the day. The market moves. It's the continuous flow, up and down, continuous up and down flow. We are the ones who categorize it up and down movement into these 2-minute time blocks, 5-minute, 10-minute blocks. These are artificially created by us and our trading softwares to help us to better visualize the market's activity. None of this is real. None of these bars exist. This is just symbolic of the price action. It helps us to digest it and to trade accordingly. But that is all, guys. I just want to do a quick video on why I use the Heiken Ashi and why I think it's it may benefit you to take a look at it from time to time to find those trends. Especially on let's see, longer time frame. Let's get rid of all of this. Just see how it smooths that price action out. So this is, sorry about that. This is a 3-month chart. You know, we've got August, September, October, November, and December. That is our movement from that point. Very, very smooth. We can clearly see our points. And let's go over to the regular chart just to get a quick glance. Still fairly clearly defined, not bad. You got these gaps here though, gaps, a lot of gaps. There's a lot of gaps in the chart. Those gaps can, you know, signify unfilled levels that you will be cognizant of on a regular chart. Heiken Ashi, you won't. You will see just a continuous flow. Like this movement here, we've got this massive green bar, and we get a retracement for 2 days. What was that, a week? 2 days, almost to the 50% level, but not to it. And then the very next day, we jump straight up. So, you know, an avid trader who got in here or here, since this didn't break his 50% line, he may have stayed in that trade. He may not have. Let's see what the Heiken Ashi gives us. It clears all of that up. You don't see any weakness. You just see a continuous movement. You're able to stay in that trade for longer. You're able to stay in that trade until you get red. In a Heiken Ashi chart on the daily, it takes a lot to turn a candle from green to red. It takes a big move in the previous day and the current day to get that red bar, because the current bar is an average of the high and the low, open and the close of the preceding bar. So for this bar here to turn red from the high and the low and the open and the close of this day, it must have been a massive drop to turn it red. So when you get a red on a Heiken Ashi daily chart, it really is a red, and it's usually preceded by another red. I don't see any red days that aren't preceded by another red on this chart since August. And even here, this area here where we got, sorry about that, back here on July 14th, when we did get a red bar and then an inside green and inside red. If you took that red trade, you would have gotten out, because this is your 50% level here. So you would have clearly seen that trade was not right. So, but you can clearly see that playing these red days for a down move in AMD or a move off of the highs of the previous day, I mean, it 100% every time. You can clearly find your levels using Heiken Ashi. You know, for me, it's top notch. I'm gonna, you know, for the foreseeable future, I'll be using Heiken Ashi for most all of my trades. I mean, I advise you to take a look at it. You know, you may not like it, it may not work for you, but, you know, take a look at it and see if it helps you to gauge at least your long-term plays, you know, some of your swing trades, if not your day trading. But that is all for today, guys. Thank you for checking in, and I will talk to you the next time. Peace.